China sets a modest economic growth target this year of around 5%, sending oil lower as investors cautiously await remarks from Fed Chair Jerome Powell this week. We're here with the latest on the pulse on commodities is Yahoo Finance's Jared Blikre. Hey, Jared.
All right. Well, let's start with the big story, which is China, and just look at their GDP, and we'll get to the commodities and the effects that this is having on them in a second. But this goes back to early 1990s here, and these peaks here are about 15%, a huge amount for GDP calculations, as we know. And right here, this low is about 6.4%, and 6% was a floor until the pandemic hit, and then the bottom fell out, and China had negative GDP for the first time in decades and decades. And now we're talking about a target of 5%. So that's below that 6% that had previously been a bottom. So all of this suggests that we are in a new regime of growth going forward, not only for China, but also for some of its trade partners potentially as well. Now, first, I want to show what the effect is on the Chinese currency here. And we saw the US dollar firm a little bit versus the yuan. And if we take a look at a one-year chart, here's what happened overnight. Here's a one-year chart. We can see the trend has been towards a strengthening US dollar over this time period, except that Chinese yuan has been strengthening, I guess, since about late last year. Now, when we take a look at how this has played out in the equities markets, first let's take a look at the Chinese Golden Dragon Index and some of the components that trade here. And you can see a mixed board. Some of the bigger issuers, BABA, JD.com, those are up 1.5%. A lot of the smaller names down, and you can see those in the red here. But we're also talking about what's happening in the futures market, and the expectations for the use of global commodities. So kind of a mixed board right here. Forget natural gas for a second. That's down 13% today. That's kind of its own animal. But here we're seeing some weakness in the energy market. Heating oil down 2%. Also, oats are down 2%. But for the most part, not seeing a whole lot of fluctuations. Crude oil, for its part, that is now in the green. You can see in this chart from midnight last night, spending most of its time in the red. It is now clawed back. So in the end, I don't think the market was terribly surprised by this. But when you take a look at what's happened with the industries that the Chinese government is now supporting, notably that is in the property sector, that is not in sectors that would be conducive towards speculation. So the Chinese stock market, all these Chinese issues that had been darlings from years past, well, a lot of those are still 80, 90, 70% down. So not necessarily the case that those have to be coming back just because the Chinese authorities are turning on the spigots once again, because they're not the spigots. There's stimulus being applied very proportionally and directly into certain segments of the Chinese economy and not necessarily the others.
China certainly seems to be tempering expectations here, especially with that growth target, hence perhaps the slightly muted response we've seen. Jared Blikre, thank you so much.